to Stock Wisdom and Tips. Thank you for joining us. Today's episode, we're going to be talking about major leadership changes or, significant leadership hires and the impact this can have on our stocks. This past Sunday, we had some very, very significant news hitting the wires. The board of Disney announced that Bob Chapek, their current CEO, was out. And more importantly, Bob Iger, past CEO of Disney, was back in as CEO. This was major, major news. Bob Iger is frankly a rock star CEO. He managed Disney for many, many years, being the architect of some excellent acquisitions that created billions of dollars of value. Organizations like Pixar, Marvel, and Lucasfilms. Those were all companies that were acquired under his leadership, and goes without saying, generated billions and billions of dollars of revenue and value for Disney Corporation. Uh, Iger retired a couple of years ago, put in Chapek, someone who he had, groomed and selected. So again, very significant news. In our opinion, on Monday, the stock didn't go up, the way it should have with this news. I think it was up 5.5%. Pre-market, it was much higher, around 10, 11%. Again, but this being such an impactful rehire, if you will, we think the stock should have appreciated more. But more importantly, in 2023, this is in our opinion, a significant stock pick that can generate some very significant returns. We'll get to that in a second. I do want to provide a second example of a significant hire this time. Mary Dillon was brought in as CEO of Foot Locker earlier this year. She came from Ulta Beauty, a company she led for a number of years. Again, a huge creator of value for shareholders and for the business. And if you look at Foot Locker's performance in the last few months, actually, since the announcement, I think it's up 60%, 70%. So these kinds of moves, these kinds of leadership changes or leadership hires can have a significant impact on a company's stock. I'm not trying to say this is like a Steve Jobs type of hire when it comes to Disney, but close. I think, with the history Bob Iger has, with, he knows the business well. He's run the company. It's not like it's a newcomer coming in and trying to learn the business or take months familiarizing himself with the shortcomings and running operations. I think there's a strong bench strength here as well. So he's going to make some changes, and he already has done some restructuring, some personnel changes as well. But this, of course, will accelerate with the weeks and months to come, in addition to 2023. So let's get to some technical analysis, if you want to call it that, looking at this pick. Again, Disney under Iger, we think, is a game changer for Disney stock. If you look at this chart, 2-year chart, downward trend, no doubt about that. Many reasons for that. Again, poor operations. Disney Plus, when first announced, huge excitement, but they're now seeing that monetizing that is not an easy task. Parks were closed, especially in Asia. So a lot of factors, a lot of inputs here that, prevented the stock from taking off. And this year it's just been, crashing, including an earnings disappointment in the last few weeks that precipitated Chapek's ouster. But again, I think 30% appreciation in 2023, that might be even conservative. Between 30 and 50%, I think, is a likely area that Disney can end up at the end of the next year. If you look at some key price points that we always recommend to look at, the COVID low was $79. Recent 2022 lows at $86. So the stock isn't that far off these numbers. We're at $96, $97. So, a very overall weak price action pretty much all year. If you think, really in the last 2 years, it's been trending down, as we mentioned. But we don't care where the stock was. We care where it is going to be. So we care about the future. So weak performance always sets up for a very impressive bounce, especially if we have a significant leadership change like this. So always keep your ear on the ground in terms of these leadership changes. Always do your homework. Don't just take the word of an analyst or a YouTube video guy. Um, do your due diligence and invest only amounts that you feel you can invest. There isn't huge risk here with this stock. You could think of it as a blue chip stock, but blue chip stocks also come down. If you had bought in the peak of March 2021, you'd be significantly in the red right now. So always do your diligence. This is Stock Wisdom Tips, wishing you financial success. Thank you for joining.